Thank you, Mortgage Banker Association, for addressing a very important issue to the California Mortgage Banker Association, which is this new CRA Bill, Community Reinvestment Act requirement that the state of California is trying for the third time now to pass and raise all these costs and fees. And it's like up to $100,000 in like fines if you don't, reinvest in your communities.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California. Fresh off of kicking some gorilla's ass this weekend. If you know, you know. Check out One Gorilla versus 1,000 Men. It's a trending video. It's pretty funny. We are rocking in the month of May. Feliz el Cinco de Mayo, Viva Mexico. And my favorite one that I looked up on Grok or whatever ChatGPT version you use was, en este Cinco de Mayo, celebramos la Valencia y el triunfo de México en la Batalla de Puebla. So basically, it's not Mexican Independence Day, but it was a celebration of a battle against France. It's kind of like beating, a guerrilla. They were seen as this big bad army back in 1862. And if you look at where Puebla is, it's outside of Mexico City. We just wrapped up our senior management meeting today. It was good. It was the shortest one we've ever had because we had a decent month or two in a row, and May's looking to be good. So it's always good when you're not grinding for every little thing. And we will be putting out our own Eastern Front on the shores of Mexico next week for our President's Cabinet in Tulum, Mexico, celebrating Cinco de Mayo just a week late. So here on the shores of Huntington Beach, the California Mortgage Banker Association is having the Mortgage Innovator Conference. And so people are starting to come into town. There'll be some dinners and stuff tomorrow night, and then the event officially kicks off mid-morning on Wednesday at the Waterfront Hotel in Huntington Beach. It's a great location. You should come check it out. And if you are a California MBA lender member, anyone that works for your company is free. We've got great participation this year, awesome panels, great sponsors. I could go the whole list, like ICE is going to be there, and Dark Matter is going to be there, and Poly, and Adium, and Winnow, and it just goes on and on and on. Social Coach, there's so many. I mean, Zactus. I just can't even tell you. So please come by. It's the last big tech show until, Digimo, all the way in September. So come on out. We'll have some fun. Okay, I'm going to talk a little bit about the Fed and the stock market, and this is not going to be a very long video, so stick with me. I am definitely not a financial advisor. I am not responsible for your losses, only your profits. But did you see the stock market had 9 days in a row where it went up? And then today, Monday, Cinco de Mayo, maybe there was a celebration over the weekend and the market was a little hungover. And it finally had a little bit of a close down. And so why does the stock market matter? The flow of money. And I have some predictions on this Fed meeting this week and where I think the flow of money will go. I love making predictions. It's a fun part of the game. And I am definitely not responsible if you make a stock bet or if you float your lock based on what I say. But it's just some thoughts to kind of mull around. So everyone is dealing with certainty versus uncertainties, a theme I've been talking about on this podcast, pre-COVID for years. And so the tariff Liberation Day brought a lot of uncertainty. But there's been mostly certainty that has come since the 3-week debacle, although everyone wants to talk about it in the media like it's just happened yesterday and everything's crazy. I think the worst is over, but then, of course, over the weekend, you see that President Trump said he's going to put a 100% tariff on the movie industry for anything that they film outside of the United States. Now, we know that the thrifty movie industry likes to make money, and it's kind of like the drug industry. You spend all this money on R&D, and then maybe you have just a horrendous box office showing like Snow White, where you spend literally hundreds of millions of dollars and you make nothing. And so, to save a buck, they will go to cheap locations, and that's kind of part of what they do. And so, then the talks started going, okay, well, are they going to is there going to be a tariff on like non-good stuff now, on intellectual property, on technology, things outside of the country? and then President had to walk it back. So the Trump put is alive and well, which means that as soon as the market starts to get squirrely or things start getting weird because of things he say, he's like, oh, okay, just kidding. Didn't mean that. Quietly, by the way, about 25% of the tariffs between us and China are being walked back. There's carve-outs, and soybeans, and auto parts, and this and that, and semiconductors. So the worst, I think, is over from the beginning of April, and I don't hear enough people saying that. The worst is over. So that's not the same as we have certainty, but we have certainty that the worst is over. How can I say that? Well, because all the tariffs got dropped down to 10%, except for China, and deals are getting worked out. And so there's like 17 nations that are being kind of aligned to basically have a trade war against China. And remember, China is the one with the trade surplus. We are the ones that are the debtors, the spenders. It is always the country with the surplus that takes the biggest hit in a trade war. And these trade tariffs on each nation telling each other is definitely an embargo, which is trade war-esque. How long will it go on? I have no idea. And I can't claim to know that. So could it go on longer than I think, and then it's worse than I think? Yeah, totally. But we're just trying to figure out what's going on. And because the president has basically had an open war, which he had to walk back because the stock market and bond market, more importantly, started getting squirrely about saying he can fire Powell and he knows how to do it, and he's going to get rid of him, and he should be cutting, which he should be. But this, which he walked that back, again, evidence of the Trump put. Will we see evidence of the Fed put this week? I doubt it. So the Fed meeting is the next couple days. The press conference is Wednesday. And that Q&A session is usually the most important part that comes out of it. So on my lunch break at the Mortgage Innovator Conference, I will try and toggle between my Miss Mo board meeting and Fed comments and juggling this conference. But will the Fed put be in play? Now, remember, Powell and Trump haven't gotten along for a while. And it's kind of a political punching bag to be able to say, hey, man, you should cut rates. Of course, it's easy to say that. I mean, multiple examples of presidents being at odds with, Fed chairman or chairwoman or chair people. But I think the pretext of tariffs has given the right for the Fed and everyone who's a voting member to say, well, we don't know what's going to go on with tariffs, and it could raise inflation, which it might. Obviously, at least 10%. But will it be transitory? Will it be long-lasting? Will it be offset by deregulation and tax cut extensions and future growth? I don't know. And the Fed doesn't know. And they could easily just say, I don't know. But the risk to inflation because of uncertainty in tariff policy, we're going to pause. And I think the stock market could sell off. And if the stock market sells off, because we've had 9 days in a row, sometimes you have a correction, right? The market likes to climb a wall of worry, even in a bull market, which is still pretty much intact. If the stock market sells off, that's money that flows into bonds, which is great for mortgage rates. So be ready to lock later this week. Just a prediction. I don't know. Also, in the words of Warren Buffett, buy the F and dip. If you get some dips and some stocks that you like this week or going into next week, there could be a lull between now and the earnings report of NVIDIA at the end of the month, which is a huge anchor in the S&P 500. By the way, Warren Buffett is stepping down later this year, and he wants Greg Abel, his, vice chairman, to be his CEO replacement. He's been groomed for years. No surprise there. Their stock sold off today. Berkshire Hathaway, B shares. Might be a great buy the dip moment. Only $342 billion in cash. I think I read $348 billion in cash on a $1.17 trillion company, which has outperformed the S&P by 2% every year for like the last 10 years. You know how hard that is to do for value investment? There's value investment, which looks for like deals, right? And then there's growth, like a tech company, like a Palantir, which reported today and by all accounts made all their numbers, but we are in a buy on the rumors, sell on the news kind of market, because the catalyst for the stock market to continue to go up, Palantir had a great, had a great earnings call today. It literally hit every number and every guidance forward was great and up. However, sold off in after hours. So that tells me the market kind of is poised to sell off a little bit. So again, I'm not a financial advisor, but for stock trading friends, I bought an S&P put this morning when I felt that the stock market rally had stalled. It's up a little bit. Could have sold this afternoon. Maybe we'll wait through the meeting. It's also a hedge against my other positions, which I hope only go up, which might not. So kind of keep that hedge on to counterbalance any losses. Anyway, not to get into all that. Thank you, Mortgage Banker Association, for addressing a very important issue to the California Mortgage Banker Association, which is this new CRA Bill, Community Reinvestment Act requirement that the state of California is trying for the third time now to pass and raise all these costs and fees. And it's like up to $100,000 in like fines if you don't, reinvest in your communities. Independent mortgage bankers, man, we got the Jenny DQ numbers to show it. Like we are doing tough loans, we are doing manual underwrites, and I know there are many others in the state of California doing the same. So why this state wants to come in and build a CRA type thing, I can't imagine. So I know that the original, the OG CFPB director, the first gotcha guy, the one that wanted to sue all of us and all the kind of stuff, and Richard Cordray is part of the architect for these kinds of programs in California. And I hope that he can find a balance on what he's trying to achieve and maybe some other methods. Would love to have an open conversation with him or anyone else putting the CRA bill together, that we are investing in communities big time. I mean, independent mortgage bankers especially are doing really tough work. So thank you for that. It's a big initiative for the California MBA, which will be part of the update that we'll talk about at the Mortgage Innovator Conference that Susan Milazzo, our badass CEO, will be talking about this week. Okay, what else is going on? Scott Bessent, the Treasury Secretary. It's like very important when he talks because he calms the markets. So Peter Navarro, he's not allowed to talk as much anymore publicly. Howard Lutnick, he's not allowed to talk as much either. But when Scott Bessent talks, who is an ex-Wall Street guy, hedge fund guy, he seems to calm the markets more than anyone, including the president. And, he is saying there's a three-legged stool, three-legged approach. Okay, so everyone's talking about tariffs because that's the most uncertain part. Of course, it yanks at all of your emotions and gets you to open and click and read articles all throughout mainstream media. But don't forget, the stock market was roaring all the way through mid to late February because of deregulation and tax policy, which is the other part in addition to tariff policy. Some like to throw in, I read a really good article on the Crispin blog that immigration policy could be like a fourth leg of that stool, although, the policy is the border shut down. So not really sure, what else to add there. It could be detrimental to our workforce not growing. So we're going to have to work on that later. But first, having extended tax cuts, now you got to pay for it. So how are you going to pay for it? They call it pay for. So how are you going to pay for it? Well, the Treasury Secretary, Scott Bessent, says, well, if the CBOE only scores us, they don't score either way, whether it's tax increases or tax cuts, and they assume a 1.7% GDP hit. But, if we can get back to our average over 3% or even 3.5% GDP in the second half of this year, or he said, to be fair to him, he said next year, a year from now, if deregulation and extension of tax cuts and then the tariff policy certainty comes to fruition and we get a budget passed that is, on par with the one we had last year, all these things could be good for the economy, even though right now in the moment, we have a lot of uncertainty. And so this is kind of a light data week. ISM services prices were up, just like ISM manufacturing was, price inputs last week were up. That's not good for inflation. But, if you use modern day rents and don't use rents in the CPI and PCE from a year ago, we're way down, like we're there, right? And so, of course, if rates come down and the Fed start cutting, we'll probably start to see housing and, rent prices go back up. But, at some point that's going to happen, right? And so do we need to wait for the labor market to break or jump out ahead of that? And so Scott Bessent likes to look at the 2-year Treasury, which is at like 386, 389. It gives room for 2 or maybe 325 basis point cuts today. If you took out shelter from our inflation numbers, well, we're at 1.8% inflation. Of course, no one takes that out. Oil down to $55 a barrel. OPEC Plus is going to they make their second announcement in a row to do like 450,000 more barrels a day. That's flooding the market with oil. So, hey, that'll hurt Russia and might get them to come to the table to get a peace dividend going and work out their agreement with Ukraine, which we now have a mineral rights deal with. The U.S. does. And, of course, we all like cheaper gas at the pump. That's really good for inflation, like the headline inflation numbers. Again, Bill Bodnar is like the only guy talking about it. Like, that's really good for inflation. Like, cheap gas is good for inflation. And the overall number is coming down. But when you strip out energy and food, which, by the way, is also coming down, well, you get people who are like, oh, climb a wall of worry. IRS got rid of 31% of their auditors. Sweet. Have a good one. Cheers.
All right, it's KP coming to you live from Huntington Beach. The party's over. Like, it looks way dead, but it was a really, really good conference. The Mortgage Innovator Conference, California MBA. It was awesome. The panels were great. The speakers were great. We already have some commitments for next year. May 6th, same hotel, the Waterfront Hotel, right here on Huntington Beach. They're setting up for a concert called Wango Tango, which is like Doja Cat and Megan Trainor coming. So, I don't know, like 10-year-old pop, 5-year-old pop. Anyway, the Women's Empower event is tomorrow. And when we did one, the California MBA helped co-sponsor one together with the National MBA, Marsha Davies and all the incredible teammates there that help with the Empower initiatives. In August, we were at the Balboa Bay Resort, and there was about 250 people there. And tomorrow, I believe, as of a month ago, there was 350 registrations. So, thought it was fitting to whip out my camera and do some, Shania Twain, Damn, I Feel Like a Woman, on the eve of this incredible Empower event. All right, conference was great. Talked about venture capital, private equity, investing, thoughts around, wins, Miles, Tom George, thoughts around investing in our industry and our verticals and some of these past investments. I mean, it's unbelievable to hear that panel. And then Neil Sahota talked, who is the AI advisor to the UN. He also teaches at UC Irvine. He said a pretty cool thing about AI. He said, AI is like a high energy intern. And I thought that was a pretty cool thing. And then, he said, when he's talking about like how AI has evolved and where it came from, he's like, the light bulb wasn't invented because of the evolution of a better candle. And that was a quote from Warren Harari. So some pretty cool content there. Shout out to all the Catholics that care. Pope Leo the 14th, dude named Bob from Boston who went to Villanova, the first American-born Pope. I mean, whether you're religious or Catholic or not, I mean, it's a pretty significant historical event. There's like 1.2 billion people on our little over 8 billion person third rock from the sun that are Catholic. So it's kind of a big deal. So there's no white smoke out here today, which is, symbolic of the Cardinals who picked, in just 2 days, they picked the Pope. It took 3 days for Shadora Sanders to get picked. Go figure. Anyway, is he a White Sox fan or Cubs fan? I don't know, but we're going to find out. It's also VE Day, the 80th year celebration of, victory in World War II in Europe. So there's a lot of history today, which is pretty cool. Fed spoke yesterday. I could talk about that. Bottom line is they didn't do anything. They're going to wait. They're going to wait and see. They're waiting and seeing if there's inflation from tariffs because they can afford to, because the economy is, quote, solid. So if the economy's good and labor's not tight, but certainly not breaking, they just see no reason to cut. And so if you took my advice on Monday, the stock market did sell off into after the meeting a little bit. And I believe the 10-year Treasury went from like that 435 space down to like 424 to 427. So your chance to get that little dip in rates that I was trying to prognosticate was yesterday. Because if you waited until today, not to be outdone, but President Trump he's not going to let Jay Powell steal the spotlight for more than a day, especially if he's not cutting per his request, who he called a fool again yesterday. Says he likes him though. They announced a trade deal with the UK, which is obviously one of our longest allies globally for pretty much anything. Now, the market likes certainty, and I am not a financial advisor. I'm not responsible for your losses, only your profits. That is a true disclaimer and also funny. let's go. Now I'm getting away. Oh, Jesus. No, I'm leaving you guys. Oh, shit. The gateless crew is trying to mess up my video. I will pause it, by the way, if they get over here. So Trump and his team negotiated a deal. Treasury Secretary Bessent is in Switzerland working with the Chinese on another deal. The certainty brought to the market on the UK deal is that the 10% tariff will stay on, but they did admit and recognize that there are non-tariff policies that are hurting trade with the U.S. So what's interesting is basically they're going to get some steel from us. We have the steel alliance we created with them, just like we kind of created this rare earth mineral deal with Ukraine. There was a $10 billion order from Boeing into the UK. Seems to be announced and wrapped up. I mean, obviously those deals don't happen overnight. We're going to sell them some beef and some other stuff. And so the market really liked that. The stock market liked that. The money flowed out of bonds and into the stock market, which was bad for mortgage rates. And so, again, I mean, that was something that came out of nowhere, but we knew some deals would be imminent. And I closed out my put trades and made a little money by the end of yesterday. And then had I had them on, it would have been a total loss. So, but, rates, went up above the 435 range and closed at 437 today. And so will that stick through the weekend? Does the bond market want to come back in and buy those higher yield bonds over 435, that range they've been trading under, because they feel that now there's good yield there and it's worth it, and maybe stocks are overvalued since the S&P 500 jumped up to over 5,700. I don't know if we can keep knocking on that ceiling of 5,750 and break through it all the way up to 5,800 and beyond. I just don't know. So of course I don't know. But it matters. The flow of money matters. These deals matter because they impact our rates. And I only put out 2, sometimes 3 videos a week, but loan officers lock every day and they want to know what's going on every day. And so if there are going to be less Fed rate cuts this year because the Fed is in wait and see mode, then we're just going to have to keep grinding and just control what we can control. Purchase business doesn't really care. They want to get, they want to just pay the rate and get a roof over their head. It's better than paying 100% interest rate on rent where you make 0, which, by the way, millennials are dominating. They're like 60% of first-time home buyers are 60% of the market. Millennials are dominating. That's people born in 1980 to like 2001, I believe. And there's like something like $37 trillion in tappable equity. There's a lot going on for housing right now. We're in the middle of spring purchase season. To give you a little insights from PRMG, our locks through the 8th of the month, so about a week now, I guess just 6 business days, we're about 200 million less in locks compared to the same 6 business days at the beginning of April, which we all know was crazy. So our ops teams all around the country have been grinding and busting their butts to try and get, just all this business out the door, get the laundry out, if you will. And they need a nice little breather. So we're going to clear out this pipeline. Going into next month, we might have a little breather. Of course, that's subject to change if rates get better at any moment. And of course, we'll keep an eye on that. By the way, this is a gorgeous hotel. This is the lobby. I just went all the way around this hotel. I don't know, what other deals are imminent. I don't know what else is going to happen, but things feel good. Don't fight the Fed on the way up, on the way down. When they say it's good, when they say it's, solid, and they're going to wait and see if something breaks, if labor breaks, and I don't know what it will. So have a great day. Thank you for everyone who traveled from all the countries who made this an awesome Mortgage Innovator Conference.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.